Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Tuesday, February 25th, 2014. We had an update across the board today, but I gotta say I wasn't all that impressed. I'll build a case for that. I'll let you make your own decisions a little bit later. The ES was really kind of the star of the show, up 11 handles on the day, breaking out to a new high. The NQs were not really that impressive, kind of lagging behind. The Dow was okay, basically keeping pace with the broad market measured by the ES. Advanced declines were really excellent for most of the day and really fizzled out later on. We closed plus 750 issues, and midday we're up twice as much. Definitely the day was just an up day and was a good day, as far as the top line goes. But if you kind of look down to the footnotes of the release statement, it wasn't as positive, and it doesn't mean that we're not going to have a positive day tomorrow or the next day. Just calling the day what it is. But we haven't done this for a while, so let's take a look at the pure price patterns of the ES, the NQs, and the Dow, and then we'll move on to the market internals from there. All right, first up, let's take a look at the ES, because I think this is probably the most important chart of the day. Let's just kind of circle back here and talk about the technical pattern. We've got this rising wedge here that's been in place here for about a year. We dunked down here, basically tested the validity of this pattern, held, pivoted back to the upside, and today took a shot at new highs and actually made a new high. And what I've done here is I just added a new little trend line here, which is basically the old resistance area from the prior highs here. You can see that we clearly made a new high in the move, but we really started to give up a lot here. And as the afternoon went on, we just kind of saw the buyers kind of fizzling out, and they were overwhelmed by the sellers. And ultimately, what we really did was we just settled right in the area of the prior highs. So while the S&P made new highs, and they'll be giddy about that on the financial news programs, technically it's not really a great day, especially when you close this deep into the range after measuring day the day before. We had update on Thursday, Friday. We had this kind of little sloppy measuring day on option expiration. Then today we tried to power up to a new high, and ultimately wound up settling right at the previously traded high area here in the market. So not really a power day, but definitely something that continues this up move. So this up move is still in place. This is a new high close on the move, which is certainly a technical positive. But the candle that we left up here, this wick, if you will, is definitely a cause for concern. All right, so next up we have the YM futures, which represent the Dow. And you can see that these are definitely the weaker of the three sides. We got down to the midpoint of this trading channel, pivoted back above there. We're not even really within distance of really putting a charge at the prior high. We did leave that same big topping tail that we saw on the ES futures. We closed about midpoint in the range, which is never positive. You see, we came up. I just added a new trend line here. We came up just a little shy of officially closing that gap. We closed the dirty gap. The dirty gap would be closing the gap range to range. We did that by trading up to at least that day's low, but we didn't get all the way up to that settlement. So technically speaking, that gap is still open, which could be a plus for the bulls, because that still remains on the to-do list, which is to get up and close that particular gap there on the Dow side of the market. But do have a new high close on the move, as you can see, off of the pivot low. Next real challenge is going to be closing that gap. All right, and here's a look at the NQ futures. The NQ futures kind of similar pattern to the ES, where we have this rising wedge in place. We use that rising wedge for support here for the pivot. We made a new high close on the move, which is positive, but we did close decently off the high, but didn't exactly qualify for an RPS, reverse pressure signal. So that's not in the books as a technical negative. We did close a new high on the move. We made a new high on the move, so this is also positive. But the the relative performance of the Nasdaq was not as good as the ES futures on a percentage basis. They actually closed dead even at plus 0.64%. But as we know, the Nasdaq side is more volatile. It's got a higher beta. So by closing with the exact same percentage gain, the Nasdaq side of the market actually, technically speaking, underperformed the broad market. So we've got a little bit of an underperformance here, but we do have a new high close on the move for the Nasdaq bulls. All right, so moving on to the market internals. Here are the cumulative advanced declines. The cumulative advanced decline is looking really good on the broad market side. We've got a series of higher lows. We do have a higher high here in the market to open the door for a new high in the broad market. Keep in mind that the advanced declines generally tend to lead price, so we're whacking out new highs here in the cumulative advanced decline line. So that's definitely bullish for the overall ES futures. Looking at the Nasdaq side essentially just matched the prior high, even though we made a new high on the move as we had just seen on the Nasdaq side of the market. This is a cause for concern. We want to see the Nasdaq side whacking out new highs on the advanced declines and not lagging, because you want to see those advanced declines leading price. When the advanced declines lag price, that's when you can see lasting tops forming in the market. So this potential double top here on the cumulative advanced decline could be a very, very big deal for the overall market. And keep in mind that the Nasdaq side of the market tends to lead the S&P side. So seeing the Nasdaq lag, even though the S&P is whacking out new highs, is definitely not a positive for the market internally. Here's a look at the NDX performance relative to the S&P. This is the NDX S&P cross. Right now we've got some problems here because we're not making new highs in this relative performance cross. So this means that the S&P is outperforming the NDX, which is not what you want to see. You want to see the Nasdaq continue to flex its muscles. And once the Nasdaq starts to falter and starts to roll over, that's usually kind of a precursor to more negative things to come. Also got another negative divergence happening in the market right now, which is the Dow Gold cross. What you want to see here is you want to see this ratio. This is the ratio of the Dow divided by the price of gold. You want to see this rising because when it's rising, that means that traders are putting on risk pretty much full on and are not worried about hedging themselves. Right now, we're definitely seeing the opposite action taking place. We had this little breakout above this triangle. Now we're back down below the apex of this triangle. You can see how technically perfectly we broke down, rallied back up to retest that breakdown, and are starting to leak back to the downside. So right now, gold is actually outperforming the Dow as an asset class, which is never a positive thing when the Dow is trying to make new highs and the broad market is in fact making new highs. One of our other key internals is the S&P divided by the TLT. So this is the S&P relative performance to the government long bonds. We're still seeing a recovery here, but we're definitely not anywhere near this very well-defined trend to the upside, where traders are putting on risk versus the TLT. So right now, there's still signs that we're still seeing some caution in the market, which is not a good thing. A lot of times the commentators talk about the equity indexes climbing a wall of worry, which is always a good thing. But when you see technical divergences, that's not really welcome. We are seeing a pretty good recovery off of this swing low here, but we're nowhere near the positive trend that we were in before breaking down and losing this channel. So until we really regain this channel, this is still a negative divergence. All right, now while there are a lot of negative internals out there, this is actually positive. The S&P or the New York Stock Exchange got very, very oversold and had this spike above the 1.35 area, which made it very, very oversold on a short-term basis. We've since released some of that short-term oversold energy to the upside, but as you can see, we've got a good deal to go before we get to that 0.85 overbought threshold. So right now we're pretty much in the midpoint between the oversold and overbought thresholds. So the 10-day trend is implying that there's plenty of gas in the tank here before the New York Stock Exchange reaches an overall overbought condition in the market. All right, now lastly, let's take a look at the relative performance of the individual sectors today. The oil services index was top gun, which is I think a very positive sign at this point in the market. We're up more than 2%, which is a really good showing. The other thing you want to look at while you're evaluating the oil services, you want to look at the transports. Here's the transports. The transports were up 0.44%, which underperformed the market. But if you combine the two, the performance of the oil services and the transports, they outperformed the market if you aggregate the two of them. So that's a plus. The negative, the stocks underperformed the Nasdaq by a pretty decent margin. The housing sector was really weak. The utilities were weak. The BKX was really not that impressive today. So kind of on balance today, I think the sector performance was okay. We had a very good performance out of the BTK, but the BTK was much higher before the end of the day and really started to roll back and give back quite a bit. So on balance today, the sectors were okay, but not great by any stretch of the imagination. The market internals right now are definitely not an A or maybe even a B rating. I would give them a C rating at best right now, and I want to see a little better performance. We're just first day into the new option cycle, so I think we want to give the market a little wiggle room here, a little spot them maybe today. But if we see these divergences again tomorrow, where the internals just don't look that great, I'm definitely going to get a little bit more concerned. All right, folks. As always, thanks for listening. This has been Rich for Tradesight, and please, if you find this information useful, please give us a thumbs up. We appreciate that.